And Elon Musk, too bored to sit on the Twitter board, retains right to free speech and keeps CEO Parag Agrawal and company on their toes. India's largest IT services company, TCS, announces fourth quarter earnings. The revenue and margins in quarter four are in line with street estimates. The IT behemoth closed FY22 with an all-time high order book at $11.3 billion. Signed two mega deals of roughly $1 billion in Q4. Though the attrition rate was high in FY22 as it climbed to 17.8%, the company did also manage to add over 1 lakh employees in the financial year. The company will be paying 22 rupees per share as dividend to investors. In Q4, the revenue saw an exponential rise of 15.8% year-on-year, and net profit was up 7.4% as compared to the previous year.
Number of customers from whom we make more than $100 million of revenue a year has increased 10 to reach 58. And similar growth across revenue bands is seen across our entire customer portfolio. From our talent and employee perspective, this has been again a strong year of headcount additions, both at a quarter level as well as for the year. We are ending the year with a net headcount addition of more than 100,000 associates, at 592,000 associates as we close the year. Attrition continues to tick up on an absolute basis, but from a percentage basis, it is starting to flatten, and we are hopeful that it will start flattening further. In TCS has the industry's best retention rates, and we continue to maintain that lead. Our attrition for the year is coming in at 17.4%.
Markets opened the week on a muted note. Tepid global sentiment and rising bond yields dented the rally in equities. Sensex down 483 points, ending below 59,000. Nifty declined about 100 odd points from the day's high to shut shop at 17,674. 30 of the 50 Nifty counters ended in the negative zone. Losses in financials and IT shares pulled the headline indices lower, though gains in metal shares lent some support. Broader markets strengthened, with the Nifty mid-cap and small-cap gaining for the third straight session. IT stocks languishing in red ahead of the March quarter earnings. HCL Tech, Infi, L&T, Wipro and SBI Life, some of the top laggards in trade today. On the upside, Grasim, Adani Ports, JSW Steel, Cipla, Apollo Hospitals, some of the gainers in trade. Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets today taking a bit of a nosedive. Do you feel this is nervousness ahead of those tech earnings, or something else, perhaps continuing to see the overall macro scenario weighing heavy? What do you feel are the triggers that the market is responding to?
I think you're right, Abha. I think there's a little bit of nervousness ahead of the earnings this time around, because one gets the feeling that this time the earnings season will not be that great. It's not that it will come as a surprise to the market, because I guess most investors know that the last quarter was not exactly great. So we might have a fairly lopsided kind of an earnings picture, because there is some global slowdown. Commodity prices had gone up quite a bit in the previous quarter, and you will probably see it reflected in the margins of many companies. So we might easily have a very lopsided kind of an earnings quarter this time, where some of the commodity companies might deliver very good numbers, and that may lift the overall Sensex and Nifty earnings. But I think many companies will probably disappoint on their earnings front, and that is something which the market is cognizant about and probably even a little nervous about. What we need to see at the end of April and beginning of May is what is the extent of earnings cuts, expectation being brought down after this quarter, and that might determine where the markets end the month of April. As such, I think the last couple of weeks have been remarkably well behaved for the market. We had a massive pullback all the way up to 18,000 plus for the Nifty, and from there the market might have felt it's got a bit ahead of itself, and we've seen some of the steam blowing off, with the Nifty losing about 300-400 points from the top. And I think it's doing the right thing going into the earnings slightly light, because the market does appear a little overvalued on the kind of earnings expectations we have at this point in time. So right now the market is consolidating, but I think it should not come as a surprise if there's a bit more downside as we wait through this earnings season. Vijay, pleasure to have you on the show. How have you read the market over the last few weeks? Because we've had a pullback from the Ukraine scare, but from here on, do you think it's a phase of consolidation and correction that the market's going through, or do you think something has fundamentally changed after the big up move of last year?
According to me, according to my limited knowledge, I think there has been a major structural change in Indian capital market. And it has happened after 2003. If you will notice that before 2003, all the bear markets were longer and bull markets were very short, were shorter compared to the bear market. Now in 2003, I think first time in the history it has happened that bull market lasted for 5 years. And the bear market lasted not more than 9 months. And before that, it used to happen in just in an opposite way. No bull market ever lasted more than 9 months, or no bear market ever lasted less than 9 months. In 2000, after 2003 and 7 or 8, bull market was for 5 years, and bear market was over within 9 months. So, and the same thing has happened in 2020. And remember that 2007, 2008 bear market, 2003 to 7 bull market was mother of all the bull market. I always say that mother of all the bull markets are always followed by mother of all the bear markets. Same thing happened in 2008. Same thing happened in 2020. Again, the mother of all this, or father of all this bull market started, and it ended with father of all the bear market in form of COVID and all. But index from high to low was made within 9 months, and index just turned around from there to never to touch it again. So this is what I feel, that there has been a total structural shift in this market. And somehow I think that this market is actually counting a table of 21. First top was 21,000, second top was 42,000. Now it was around 63,000. Maybe next top will be somewhere around 84,000 or something. So I think there is a complete shift, fundamental shift in structure.
Where are we now, Vijay? But do you think we'll start making new highs sometime in 2022 again? Or do you see this process of the broader market consolidation? I'm not talking about the Nifty and the Sensex, but many mid caps, smaller large caps have corrected between 20 and 30%, some even more. Do you think this process is coming to an end and we'll start seeing new highs again? Or do you see this phase lasting longer?
You see, I think according to me, this bull market or bull phase or bull run, whatever you call it, it had ended in 2021, September or October, somewhere around. That time, index had made all-time high. And after that, it consolidated, it fell down. And I think during this March 22, whatever index had touched, whatever bottom index had made, I think according to me, that is the bottom. And forget about the index. I have said this number of times, this index is very deceptive. I am investor in a mid cap, and I feel that all these mid caps are going to show a new high before the index shows. So this is what my perception, all my investments are, made in this theory only.
Okay. Let me ask you about something else, Vijay. Forget about the index. But as an individual investor, one major theme that you must be grappling with right now is the kind of rise in commodity prices that we're seeing over the last few months. I mean, as a professional investor, how have you incorporated that into your own investment philosophy and strategy?
You see, so far, I have understood all my investments. Till date, none of my investments are having a negative impact because of the rise in the commodity price. I think, so that is why I am not much bothered. And so far commodity is concerned, I feel that this boom in commodity is going to remain here for many more years to come. And so this is what my strategy is this. And I am still staying invested.
Vijay, what are you making of the geopolitical risks in the market, the way this may play out on the import-export sector as well? How would you position yourselves there? Again, even if it's just in terms of, kind of guidance you'd like to share with some of our newer investors, in terms of how you see things playing out.
See, I'll tell you, ever since I am in this market, I am facing this geopolitical risk. America is every time in war in last 30 years. they have fought 13 wars and spent $13 trillion. This is what I tweeted also a few days back. So the problem is this: when there is a strong country fighting a war with a weak country, I think that's not a big issue. The problem arises when a strong country fights with a strong country. So there is a song I have written. I will just recite few lines for you. That kabhi macro, kabhi micro, kabhi slow down, kabhi scale, kabhi US, kabhi China, kabhi झगड़ा, kabhi मेल. प्रॉब्लम के है कई नाम यहाँ, जरा हटके, जरा बचके, short term में मेरी जान. So I am following the same thing. Yes.
You can catch the full show today on businesstoday.in as well as our YouTube channel. And here's what else is making news in the corporate world. Your personal auto and home loans are set to get pricey if you're borrowing from state-owned Bank of Baroda. The bank has raised the marginal cost of funds-based lending rates by 0.05% across tenors. The benchmark one-year tenor MLCR will rise to 7.35%. The new rates will come into effect from tomorrow. Veranda Learning Solutions makes a decent debut on Dalal Street, listing at a premium of 15%. But the listing on stock exchanges has left many IPO investors scratching their heads as the price differential between NSE and BSE was as high as 25%. The price gap is only because of the difference in pre-open rate of the stock on the two exchanges. After listing, the stock was locked at its 5% upper circuit limit on both the BSE and NSE. Ruchi Soya is in the spotlight again. The stock rallied in trade today. This after the board gave approval to change the name to Patanjali Foods. The company will also evaluate the most efficient mode of enhancing synergies with Patanjali Ayurved's food portfolio. On the other hand, speculations are rife that Patanjali's food business might get merged with that of Ruchi Soya. Post the FPO, the company has repaid all its loans to become debt-free. With the aim of scaling up its ambition in the financial services sector, Godrej Industries announced the launch of Godrej Capital Limited. The business will expand its retail operations in 6 new cities this financial year, in addition to diversifying customer segments and launching new business lines. Godrej Industries has committed to invest 1,500 crore rupees in capital in the financial services arm. We take a very quick break on that note. Back in just a moment.
All over the Sri Lanka. The fuel prices, of course, there are no fuel at all. There is no foreign reserve to import. There is a rocket high inflation, soaring inflation that is affecting the common people, and that's exactly triggered this massive agitation against the government. The crisis here at Ground Zero continues. Bringing you this report from Colombo with Divya Ashutosh Mishra for India Today.
Grounded in journalism, on the ground reporting, only on India Today TV.
When it's the world's biggest news story, there's only one gold standard of journalism. When it's the world's biggest news story, there's only one gold standard of journalism. When it's the world's biggest news story, there's only one gold standard of journalism.
Welcome back. There could be some relief for you as far as prices of petrol and diesel are concerned. Highly placed government sources have confirmed to Business Today TV that the Petroleum Ministry is in discussion with the Finance Ministry on reducing excise duty on both petrol and diesel. The government, according to sources, is also trying to keep prices of domestic LPG stable. However, there's no relief for commercial users of LPG, with prices likely to be hiked again soon. Chetan Bhutani joining us for more on that story. Chetan, take us through all the latest.
Our Finance Ministry and the Petroleum Ministry, the two nodal ministries for really deciding and giving relief to the common man as far as the fuel and the prices of LPG is concerned, are in discussion to reduce the excise duty. However, it's the Finance Ministry's decision ultimately. But our sources are telling us that as of now, the prices since have been stable in the last 4 days and have been on the rise, have been stable since April 10th. However, sources have added that the prices of LPG are also being closely watched by the government. The government is trying very hard not to increase the prices of domestic LPG users, but there could be some bad news coming in for LPG users, LPG commercial users, because as far as they are concerned, they recently saw a price hike. However, in times to come, we can expect some kind of bad news for LPG commercial users. However, the price of LPG has been rising since November 2020. A 14.2 kg cylinder in Delhi is now costing about 950 rupees, about close to 60% hike. So clearly, in times to come, we can expect some relief. But yes, for commercial LPG, there could be some bad news coming.
Okay. All right. Thanks for joining us with that, Chetan. Horror stories of an unprecedented lockdown in China's most populous city, Shanghai, of people forced to spend days without food, without medical care. These stories have been hitting headlines for the past few days. The news has also spread nervousness in India, where businesses are preparing for shortages of everything from auto parts to chemicals for medicines.
Shanghai, the hub of high-tech production in China. Producing everything from electric Teslas at gigafactories to integrated circuits crucial to running electronics all over the world. These were images of Shanghai during normal times. This is what the super city looks like now. Its 26 million residents locked up in their homes, unable to go to their jobs, unable to keep their factories running, bringing a mega economy to a screeching halt. In November 2021 alone, Shanghai exported computers, chips, electronic hardware, telephones, cars and auto parts worth more than $10 billion to the world. The lockdown has choked this supply, starving economies around the world, including India, of crucial parts to keep the production lines running. Shenzhen and Guangzhou, two other Chinese production powerhouse provinces, have also been hit by COVID, resulting in lockdowns in many areas. These provinces keep the world economies supplied with hardware, electronic components, chemicals and pharma raw materials. In fact, 70% of India's medical ingredients are sourced from these provinces, leading to panic in the Indian pharma sector. Even though more than 26,000 COVID cases were detected in Shanghai on Sunday, city authorities have been forced to slowly lift restrictions. Economic activity has suffered, with factory output at a 2-year low. Even car sales plunged in March. Inflation has spiked, with vegetable price here by nearly 18% in March. There are fears that worse could be in store because the lockdowns have hurt spring planting of crops, including rice, soya bean and corn, leading to speculation that their prices could zoom. Chinese stock markets plunged on Monday, with both the CSI 300 and Hang Seng down over 3% each. Some analysts are predicting that the situation may force People's Bank of China to cut rates sharply, something China and the world wants to avoid. Bureau Report, Business Today Television.
Hours before the all-crucial virtual meeting between Prime Minister Narendra Modi and US President Joe Biden, Defense Minister Rajnath Singh met senior executives of American aerospace and defense majors Boeing and Raytheon in Washington, D.C. this morning. Singh asked companies to take advantage of policy initiatives to make in India and also to make for the world. The Defense Minister, along with External Affairs Minister S. Jaishankar, arrived in the US capital on Sunday to attend the India-US 2+2 ministerial dialogue, the first under the Biden administration. Sources say the two sides will explore several deals, including the purchase of FA-18 Super Hornet aircraft for the Indian Navy and MQ-9B drones from General Atomics. Several other defense deals, including those for missile systems and air defense systems, are also pending between the two nations. He had announced that he would be a passive investor in Twitter. But a week since Elon Musk became the largest shareholder of the Blue Bird, he has kept the company and its management on their toes with various tweets and a discussion with Jeff Bezos on whether to turn the Twitter headquarters into a shelter for the homeless.
It has been a busy week for a man who is revolutionizing travel to space, on the roads and under the ground. It's been a week since he announced acquisition of more than 9% stake on Twitter, making him the biggest shareholder in the highly visible but highly unprofitable company. A week packed with suggestions and polls on how to make the social media powerhouse more user-friendly and profitable, shaking up the management. Even managing a reaction out of the elusive Jack Dorsey, the co-founder and former CEO of Twitter.
Is he going to have the impact he's had, of course, with Tesla, SpaceX? No, not nearly as much, but he's had the golden touch. And from an investor perspective, especially frustrated ones for Twitter investors, this is a breath of fresh air.
His latest, an exchange with the second richest man in the world, Jeff Bezos, about converting the Twitter headquarters in San Francisco to a homeless shelter. Musk started the poll on Saturday with more than 90% of the respondents backing the idea. The poll came even as Twitter announced the 50-year-old serial entrepreneur will not be joining its board of directors after Musk ultimately declined their offer to take a board seat. The announcement was made by Twitter CEO Parag Agrawal Monday morning, who gave no reason for it but added that Musk remains the company's biggest shareholder and the company will remain open to his inputs. And Elon Musk's inputs are many. For the man who runs the boring company has ensured the week has been anything but boring. In a post on Saturday, Musk asked the Twitterati if Twitter was dying, saying most of the top accounts rarely tweeted and posted very little content. In another series of tweets, he criticized the company's products, suggesting Twitter make the website ad-free to ensure it was free from all corporate influence. By staying away from the Twitter board, Musk is no longer bound by an agreement he signed earlier not to raise his stake in the company. He had pledged not to purchase more than 14.9% stake or to take over the company. Today's reversal means Musk can keep buying more of Twitter and influencing its future, including adding an option to pay in the cryptocurrency Dogecoin. Bureau Report, Business Today Television.
And that's all we have time for on the show today. Thanks for watching.